Okay, good afternoon, everybody. Let's go ahead and get started. Just want to welcome everybody here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there. Just let me know that it is indeed working. Hope everybody's had a fantastic Monday so far. Looking forward to our trading psychology webinar, basic trading for the week. I had a couple of people ask me to talk about trading psychology, and so I thought this would be a really good webinar or opportunity and webinar to go over this topic. I haven't done a trading psychology webinar before. I mean, I've talked about it in many webinars, but this one's solely dedicated to that. We can talk about other things during basic training, of course. So if you guys have questions, feel free to, hit those questions, hit me with questions. But yeah, I'm looking forward to this. I've put some pretty good stuff together. I'm really excited to share. I think it'll be very insightful. If you guys have questions throughout the webinar, feel free to ask those questions live. If you're watching this in the recording or on YouTube, feel free to ask those questions in the comment section down below. But before we get started, as always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, well, let's go jump into trading psychology. So I've put together several key aspects that I think fit very well with this topic. First of all, let me give you a kind of a brief definition of what trading psychology is. When every single one of us who comes into this market, we come to the market with different backgrounds, we come with different experiences of life and trading and finances. And so, you know, each one of us is different and we come with, like our own baggage, just our own way of doing things. And so when we trade, uh, uh, we might have certain things that we do that we bring to the table that help us trade better. There might be things that we bring to the table that maybe don't help us, right? And they're kind of I wouldn't call it like a curse, but it is something that, we have to work on. And the faster we can identify those things in our lives that make us think a certain way, the faster and the better uh, quality of trades we can take, the better that we will trade, right? So let's talk about just the basics here. The way this webinar is gonna run is we're gonna start by talking about the aspects of trading psychology, and then what we will do is talk about the what a like an example of what a poor trader's mindset would look like, and then an alternate style of a trader who has a positive trader mindset, and how each trader will typically trade, what kind of strategies each trader will typically navigate towards, what kind of risk management style each uses. And then you can kind of decide from there if you're in either or the other camp. My guess is each one of you, whether you're watching this live or in the recording or on YouTube, every single one. In fact, when I was putting this webinar together, I noticed that I had both aspects. Like, so when I went through the different profiles of a poor trader mindset and a positive trader mindset, I noticed that I personally resonated with both sides in certain aspects. And so it was kind of good for me to see, like, okay, these are the positives, these are the things that I'm doing well currently. And then I noticed other areas where I was like, dang, I definitely need to work on this other aspect. So if you go through this and you're like, yep, I think I'm good there, that's good. You'll probably find several things that you're already good at. But my hope is that each one of us will also take the time to identify and be honest with ourselves to be like, yep, that's a crucial part that I'm not very good at yet. So, all right, well, let's start right here. So, number one is emotional control. Emotional control is managing emotions like fear and greed. It says it's crucial to avoid impulsive decisions. Yeah. So like for me, like I'm trying to think of like examples of emotion control outside of trading. Like if I got hit with some bad news, whether that bad news be on like a relationship or a bad news in like finances or bad news, could be something, outside of those two parts of my world. Anything could be bad news, right? Like, how do I handle those types of situations? I think anybody naturally would say, well, yeah, I don't like it when things don't go my way, right? But if we can quickly take the bad news in and then be like, okay, what can I do about this? If there's something that can be done, then we should start immediately, and that should be our reaction is to do something about it if possible. Some things are completely out of our control, right? But if there is something we can do that's good, and a lot of times, like even the things you can't control in life, you can control your response to those things. You know, like if you get hit with some bad news about, like I said, something in finances or something with a relationship, with somebody or family or friends, and it hits you pretty hard. Those are things that move our emotions. I've noticed quite a bit. So the way we respond to those things really determines, um, our control over our emotions. Should we have emotions? Yeah, of course. We're humans, right? I definitely enjoy when I hit a really good trade. Like if we're trading really, really well during some of those really good weeks where we just hit the trades correctly, we're just really in sync with the market. Yeah, I definitely enjoy that. And my emotions are definitely higher that way. On weeks where we're not trading as well, I definitely feel it. But it's all about having that control to be like, okay, this is my situation. How do I work and continue to do what I know works and the things that I've committed to continue to do, right? All right. And that leads us to discipline and patience. So, discipline's huge. This is actually something that I feel like sometimes I struggle with. It's one of the things, the aspects that I looked at, and I was like, you know what? I need to be really honest here with myself. I think a lot of people view me as very disciplined. I think I am in certain areas. Like, definitely, I have certain things that I really commit to in my personal life outside of trading. Like, for example, I'm really committed to making sure my bed's made every morning. So it's just one of those things I don't let through. I always do it. I always get that done. What's nice about making your bed is it's a very quick, easy accomplishment. You can put aside and be like, yep, it's done. So even if crap hits the fan the rest of the day, I know that that part of my life is taken care of. So when I do go to bed later that night, it's kind of like a nice thing to be like, you know what, at least this is doing well, right? If nothing else goes well, at least that's good, right? So you try to get those early accomplishments in your day, and that's discipline. Now, one of the areas that I struggle with personally is I love to try different strategies. I'll go out there and mess with, I'll hear something about something else somebody's doing, and I can't help but want to try it. Right. So I try all sorts of different things, and sometimes it's good, but one of the things that's I feel like the downside to that is not having the discipline to stay consistent with all the things that I've already committed to do to trade. So that's something that I've concluded to work on. But everyone has to ask, are you disciplined with your trading? You also, and that's a tough thing too. Discipline is different from being rigid. We're actually going to talk about rigidity as well in our psychology discussion, but they are two different things. And rigidity is more like the inability to change and adapt, versus discipline is the ability to commit and execute what you've committed to do, right? All right. And then obviously patience is huge because like with and I feel like it goes hand in glove with discipline because especially in our program where we do a lot of swing trading, we don't care so much about the daily fluctuations in the market as much because a lot of the trades we take are swing trading nature. We are trying to detect what the banks are doing in advance. And so with what we do, we have to be more patient. We have to be patient to wait for those trades to play out. Feel like we get a pretty good dose of it. A lot of scalpers don't have to be patient as often, in my opinion, because they they're just off to the next trade 10 minutes later. If a trade goes in against them in 5 minutes, the 5 minutes later they're going the other way, right? Which is not necessarily a bad thing. It's just a different style. I've just noticed, and I've met tons of traders out there that really struggle with the scalping side of things. I struggle with it too. And I think you kind of get what you pay for, right? So, like when you subscribe to be more of a scalper, what ends up happening is you're basically just going through the drive-through every morning rather than, going to a night like think about it. Like when you go to a nice restaurant, you sit down, they're going to feed you better food, they're going to give you better service. It's going to take a while. Like you might be there an hour and a half to fully play out the service that you're going to get at this nice restaurant. Whereas versus like if you go through the drive-through, you're going to get it in like 5 minutes, 10 minutes, your food's done. And but maybe it's not as healthy for you, right? So it's the same kind of thing. Like you kind of, in my opinion, you get what you pay for in trading. So I like this swing style because it really fits what the bank narrative is all about. And so, for me, I look at it like, okay, I'm going to get paid out over time. And so I'm patient for that. That's the way I look at it.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Okay, so we're going to also talk about confidence. So confidence is the ability to trust your analysis and strategy. And there's another part we're going to talk about overconfidence, but with trading, we have to be very confident with what we decide to do. Now, we don't want to be overconfident either, because if you're overconfident, that can lead to us just disregarding risk management principles. So I'm about as confident as they come when I take a trade, but I always put my guardrails up, and we're going to talk about that later. Okay, and then obviously risk management's a big deal, adaptability, focus, and having realistic expectations. So on to part two, you have stress management. Oh, that's huge. We're going to talk about that, but yeah, like if so people come to trading sometimes, they try to trade as a way to get out of their situation, like out of their issues of life. Like if you're struggling to pay your basic things like your electric bill, your gas bill, or your water bill, those kinds of things, if you can't even pay those things, it's really hard to be a successful trader. It's really hard. I've seen people do it, but it's like extortionate risk. I've seen more people, let's put it this way. I see more people come through who are like that, and they wind up not being that success story that everyone dreams of being, than those that are not. And I'm not trying to put a damper on things. It's just a reality and you're kind of in a crisis mode, and that would create stress in your life. So and this is why I'm putting together, I think I've mentioned this before, but one of the things that I've noticed as I've helped people in the world of trading is there's a tremendous need to help folks with just basic finances and building credits and saving money and investing wisely. So I'm building a course right now that will be specific to helping people kind of with the basic things, like again, learning how to save on a schedule, learning how to build credit, what that looks like in each country that you live in, because every country has a credit system that's a little bit different, right? And once you can get those things underway and you've got some, you're a little bit more fluid in your finances, then it's a lot easier to be successful as a trader because you can devote more time to your success and to your learning. You can invest in all that. And then you can also take better trades because you're no longer stressed to make the next trade, your next $1 million trade. You're more just following your strategy, right? And that's what we want to see. Then obviously let's see, consistency, self-awareness. Oh, this is a big one that we think we don't talk about enough, but yeah, recognizing your own biases and tendencies, right? So, one of the things that we talk about often in our live trading calls is the concept of sentiment, right? So, sentiment is where retail traders pile into one direction and then subsequently they go another way, right? So the analysis or the analogy that I give people is if you ever wash a cookie sheet like under a sink, let's say you just made cookies earlier that day and now you're going to go wash the cookie sheet. If you fill up your cookie sheet with water under the sink, what happens if you slightly tilt the cookie sheet one way? All that water just quickly rushes to one side, right? And then same thing if you take the cookie sheet and you tilt it the other way, it quickly goes the other way. That's how markets work is that money flows from one side to the other side, back to the other, over years, over days, over weeks, over months. Markets just the financial cookie sheet uh, goes from one side to the other to the other to the other. It's very cyclical. But traders do this too. So retail traders, they pile into long positions, they pile into shorts. They pile into longs when they think the market's at a discount, and they pile into shorts when they think it's at a premium, right? And so we have to recognize that we're almost I don't like to say the word programmed, like we're pre-programmed. So I'm trying to think, like it's like almost we're we have, we just come equipped with a tendency to want those kinds of things, like buy the market at a discount, sell the market at a high. And those are good things. Obviously, you want to buy the market when it's low. You want to sell the market when it's high. But the problem is that a lot of times in trading, that mentality gets us into trouble because now we trade like the masses. So we have to be self-aware of those types of tendencies when we become a trader, because you kind of have to be able to look beyond those lenses and put new lenses on, kind of have a new paradigm of thought to make better trades. And then yes, obvious. So this is a big deal too that I just wanted to bring up as well as this concept of being a continuous learner. So a lot of folks that I meet want a quick fix to trading, and I do provide as best as I can a way to do that. Like the weekly trade is a pretty simplified approach. You should be able to make money over time. It's not going to be an every week you're going to be profitable type of thing. But yeah, if you were to take the weekly trades that I send out on the weekend, put in an average daily range stop loss, as long as you use the lot size calculator, you should be a profitable trader if you just did that and that alone. And so a lot of people like that because then they don't have to be a continuous learner, right? Because they don't have to really put a lot of investment into it. Um, and I think that's okay. I think that's okay. If that's all you want, that's all you're going to get. And you will be successful. But if you want to become a professional trader and you want to develop skills of risk management and take even more excellent trades, then you're going to have to become a continuous learner. The other thing too is this market's constantly changing, right? So we have things that change throughout the industry, like we have the prop firms and things like that. That's kind of a newer thing, the prop firm industry. You have to be on top of you have to be on your toes to know what's happening there. Same thing with like the crypto world. These cryptocurrencies are becoming tradable assets that are now becoming regulated, right? The more you learn about those, you might be trading those more active. Let me put it this way. In the next 10 years, we might be trading more cryptocurrencies than we're trading fiat currencies. I'm not saying it will happen, but it sure seems like we're trending that direction. There could become a day where we trade more like Fed coins, the cryptocurrencies that are tied and pegged to the Fed of each country that has a major international currency, right? And so that becomes the new currency that we trade, right? So anyway, just things like that. That's what it means to be a continuous learner, somebody who's consistently looking to improve the way they know about the markets and the way that they trade. Okay. And then obviously, another aspect is objective decision making and then maintaining a trading journal. This is something that I feel like I need to detail and outline a little bit more is the need for some kind of trading journal, right? One of the ways I've kind of like I used to do this, so I'm not going to say that I do this constantly, is I don't use a journal for every single trade. What I've kind of changed towards is I have an account for every single strategy. So I don't trade multiple strategies in one account. I think you guys know that that's a big no-no for me, right? So the way I kind of journal my trades is I trade only one strategy in one account. So if one strategy starts to outperform another strategy, I can pay attention to that and ask questions like, why is that strategy doing very well in this type of market condition? Or let's say another strategy starts to take off and do very well. Or maybe one just plunges and stops working altogether. Then we can start asking those questions like, what happened to this strategy? And is there a need for a change at that time? So that's kind of how I've been doing most of my journaling is by separating strategies in different accounts. So the weekly trades that I take all go in one account. And then when I do the price action trades, those have other accounts where I take those. And I actually do have an account for the modified. Whenever I do like one of those modified martingale setups throughout the week, I have an account for modified martingales, right? So, you do have, for me, I have to have several accounts to be able to do everything that I do. If you're only going to trade just like the weekly trades, then great. You just need one account. You can mix other strategies in one account. I don't do that. It's the same thing. Like you guys know that I invest in these forex robots, and I have these forex copy traders that trade for me. Whenever I open up a new one, I put $10,000 into each one, and I only trade the one bot. I don't mix multiple bots in the same or multiple copy traders in the same account. It's always separated because I want to make sure and see that the results of one is doing better than the other. If one misbehaves, it only misbehaves with the allocated capital that's assigned to that account rather than the collective of all the other copy traders, right? Because sometimes that happens too. You could have stuff that misbehaves or a strategy that just doesn't do very well in a certain market condition. So that's why I keep things separate. That's my journaling. That's what I've been doing. But when I was brand new to trading, I would journalize every single trade in an actual Excel or Google Sheet. That's a good way to do it. And I highly recommend that you do one of those two things, whether you keep your strategy separate or you would keep an actual journal. You got to do one or the other. All right, cool. So let's talk about the profiles. Okay, so we're going to talk about a poor trader's mindset, um, and a positive trader's mindset. So if you came in late, one of the things I wanted you guys to think about as I go through these next two slides is I want you to find one or two bullet points that resonate with you. So when I was going through this, I noticed that when I went through the positive trader's mindset profile, I noticed several things that I felt like I was already doing well with. And you're going to see the same. And then when I went through the poor trader's mindset, this one right here, I noticed that there were several things that I was definitely struggling with. So one of the things that, a lot of times we like to beat our chests and say that we're doing great, but the best types of traders, in my opinion, are those that are able to be like, you know what? I really am not that good in this particular area, or like I'm impatient, or I lack consistency or self-awareness or whatever it is. And the more honest you can totally just be totally like totally own it, total honesty with yourself, the faster you improve. Okay. So, um, I think it is good to point out the good things that you're also doing, but yeah, if you can look at what you're not doing well objectively and not beat yourself up over it, the faster you'll get better, right? It's the same thing. Like I do this like right now, like um I think I've been talking to some of you guys about this. Like one of the things that I've been doing is I've been going on these runs recently to help my physical health. I've gained some extra pounds and stuff like that as a trader, I think that's natural, right? So I have to be more self-aware. Okay, like, okay, I'm not out plumbing. I'm not out, working with my hands as often as other jobs would have me do. Okay, I got to be brutally honest with myself. Okay, that means you got to make up for that. Okay, that means you got to get out, take more walks. You got to get in the sun. You got to go get off the computer. You got to stand up more. All that kind of stuff. Like this brutally honest stuff, because otherwise, the consequence of not doing that is I'm just going to be this couch slouch over here just sitting at my computer. That's the consequence, right? And it's not like to be mean to myself. It's just like, hey, this is the honesty. Like this is what happens if you just sit, you know what I mean? So that's what I want you guys to do the same thing. Like look at this stuff and just say like, yep, I could definitely do that. And then get motivated about making the plans to change it, right? All right, so let's go through each one. And some of them will go in more detail. Some of them we won't go as quickly through, but let's start with number one. So emotional reactivity. We this kind of goes back to uh, part one, like your emotional. I think it was called emotional control. So this is more like the like what you do with this aspect. So how reactive are you to a situation, right? So like for me, if I get hit with bad news, is my initial response to gasp out loud, and start getting angry. Same thing like the other day, um I was driving my truck and this I don't know, this little car comes by thinking they basically try to pass me on the right lane. And I hate it when people do that. And I even had my blinker on. Like we had just turned left going on. We were stopped at a stoplight. I turned left and I was trying to, I don't swing lanes. It's just, I hate lane swingers. So I don't swing the lane when I turn. I get into the appropriate lane, then I flip on my signal. I wait a second or two, and then I start to get into that right lane because I'm a slower driver. I don't drive that fast. Well, anyway, this car behind me thinks I'm too slow. I literally have my blinker on and I'm trying to get over this so that people can pass me on the left because I'm a slower driver. Just I don't drive that fast. But it kind of made me angry. Like I definitely reacted to that. I was like, this is annoying. Right. But I've one of the things that I've committed to, and I think I've gotten better as I get older. I think that's why my insurance cost gets less now that I've gotten a little bit older. But when I was like 5 years ago, my insurance was so much more. Now it's a lot less. Is it's almost like you get better, I think, when you get a little older to not react to those kinds of things as much. Obviously, it's still annoying, but it's like, what's better, create a road rage situation, or should I just let this one, like, I'm not going to pick this battle. It's not a battle worth fighting. And you just kind of, you know what I mean? So it's those kinds of things. Like if you have perpetual road rage, you might not be a very good trader, right? Like that's just that is like that's just it might I'm not saying it will happen, but like that's just something like okay, this is an aspect in my life. This is a psychological thing that could correspond to other parts and facets of my life, right? And it will in fact appear in the way you trade. So if that's something you feel like you need to work on, maybe give it a shot, Um, trying to think of how you could do that. Just, I think for me, like the reason why I don't participate in road rage incidents is because I've already made the decision before it even happens to not engage. So that's like why I don't, I mean, I didn't have that commitment 5 years ago and I did get involved in some of those things. I never got in trouble, but like I'd rev up my motor and all that kind of stuff. And I don't do that anymore. So I feel like I'm good now. Never, no one got hurt. We didn't do anything. But I guess what I'm seeing is the reason why I don't participate is because I've already thought through it before it's even happened that I won't do it. I won't even do it. Um, so it's just those kinds of things. Like ask yourself, okay, if I was put in this situation, what's my response already? Because sometimes these things happen uh, in the moment, and you don't really have a lot of good decision making necessarily in the moment. So you have to kind of think through what you've already decided that you will do. All right. And we talked about discipline, right? So we don't need to talk too much about discipline, but yeah, that kind of goes hand in glove with that. And it also goes with impatience. One of the things that I've noticed with swing trading that you guys will notice if you're new to swing trading is you'll have trade setups that will come along and many that could take a while to develop. Some trade setups, like I could have 3 or 4 swing trade setups that happen all within 24 hours that look pretty dang good. And they'll trigger right away, within 12 to 24 hours we'll be in the trade, 48 hours, 72 hours later we're done. That type of thing. Then you could have periods of time where you swing trade and there's like really no good setups. And it just like I'll show up to live trading in the morning and I just don't see a lot of opportunity. This morning was actually a little bit like that. I didn't see a lot of stuff that I was like, oh, I'd love to just take that trade. There's a few, like, and I even have another trade I want to post, but it's not like we're gonna have to wait for the market to come and trigger us in. It's on the Euro CAD. We'll take that trade later. I'll probably post it. Um, but it's not ready right now. Like it's not a trade that I would get into at the exact price that we're at. We need to wait for it to kind of come to us first, right? So we have to have patience to allow those trades to develop the right way rather than trying to force them like a scalper would. Um, right. So anyway, it's just a concept that I think is really important. We have to kind of learn to be okay with it because it's either feast or famine with these swing trades. And so what I do is when it's famine is I don't force trades. I'll just sit on my cash. I'll just sit on it. And then when everything comes in, we'll go hard, try to make all of our money in 3 or 4 days, like 2 weeks, 3 weeks worth of gains in 3 or 4 days, and then we'll be done. And then we'll wait for the next one and so on. Right. I'd rather do that than try to force everything all in one day. I think one of the reasons why we do this is because a lot of people have these ideas of like, what's your daily goal? What's your PIP target goal daily? How much do you try to make a day? And it's like all of this thought process comes from jobs. Like if you think about it, because when I used to go to a job, they tell you, okay, here's your job. You're going to make this much an hour. Or if it's a salary, you divide that by the number of days you work in a month or a week. And then you're like, okay, I guess that's because even if you have a salary, it's still an hourly rate if you think about it, right? Because if you work 40, 50, 60 hours a week, and you get a salary, then you're still hourly, right? Because it's like you're still it's you can still divide that out pretty evenly to about how much time you put into it, right? And so, you go to work on Monday, you make the same amount as you make on Tuesday. You go to work on Wednesday, you make the same amount as you made the previous day, right? That's how people look at it. And so trading is just not, in my opinion, I haven't seen it. It hasn't been that way for me. For me, there's 21 or 22 trading days in a month. And if I can make all my money in 3, 4, 5 days, then that's what I'll do for the whole month. Um, and so a lot of the times I'm sitting on my hands, or if I'm taking trades, I'll try to mitigate losing trades that are not going the right way. Just cut them off as quickly as I can and appropriately. And then you just have those, periods where everything just goes in your favor just perfectly. And when they do, that's when you make most of your money. But as you guys know, like there was bank holidays today. I think today's a German and a French. bank holiday. And it's a holiday in some, I'm trying to remember. There's another bank holiday today. I'm trying to remember. That's why the markets have been generally slow today, is there's a couple of bank holidays. There's one in the Orient and there's another one. I'm trying to remember where exactly. And then there's another one. And then obviously you have the ones in Europe today. So that's another reason why the bank, it's been slow. So, but like if you were to go to a job today, you'd get paid, let's say like the average American makes like $200 a day or $190 a day or something like that. I think that's just the average wage or salary. It's 185, $190 a day. And so if you go to work today, that's you'll get your $190. If you go to work tomorrow, you get your other 190. You go to work the next day, you get your 190. But trading is like totally different. Like it's so different. I don't have a daily dollar goal or a daily pip goal because the way patience works is you have to be mindful of what the market's giving you. Because if there's a bank holiday, you're not getting paid today, right? Um, or even like let's just say you take a bad trade and it's just not going in the right direction. You're not getting paid. In fact, you're going to lose money for that. So that's why I say in trading, what I've noticed is that just most of the money is made in a very short period of time. And that's okay. It's just the nature of the market. So you might have a day where you make $5,000 or $10,000 as you start to get a bigger account, and other days where you might lose thousands as well. Um, and many days, and this is what it's like for me as a swing trader, is many days you're just sitting on your cash. That's the vast majority of the time, is you're just a cash position. And to me, that's really where you got to be. Um, Unless you're a full-blown investor. Like if you're just investing in stocks or something else, then you're just going to be, yeah, fully invested, but you're not trading, right? So trading is mostly a cash position, just plain and simple, period. You're just cash. All right. And then the next thing, I'll go a little bit faster. I'm sorry. I wanted to make sure we cover every concept, and I've had a lot of thoughts I wanted to share. So risk management and rigidity. Let's start with risk management. Um, um, so this is probably where most people are going to just mess up, is not even taking the wrong trades. It's just their risk management. So if you can't get this figured out, like it doesn't matter if you pick really good trades. It doesn't matter if you have the best indicator, scanner, whatever you name it on the planet. It just doesn't work. Yet you have to have good risk management. The reason why we do this is we talked about this morning. We took a trade. It has a 600 pip plus target, and with the franc yen, and it has 100 and something pip stop loss. And some trades we take have like a 30 or 40 pip stop loss, right? So it's like four times less, three times less the stop loss. And so should we trade the same lot size on each trade? Well, a lot of people who don't exercise risk management do. They just have a fixed lot size for every single trade that they take, right? But we're different, right? We want to make sure that the lot size that we appropriate to each trade is, in fact, the correct lot size, right? So when I take a trade that has a 100 pip stop loss, it has a smaller lot size than a trade that has a 30 pip stop loss, right? Right. But both trades are risking the same amount of money, right? We're managing the risk the same amount, but we have to get those other variables to jive together in order to get a specific outcome. That's why we use a lot size calculator. And unless you adopt it, I think it's very difficult to be a successful trader. I've known people that have gotten away with it, but they'll take tremendous drawdowns when they have a bad day. Um, um, and I haven't checked in with a lot of people who don't. Like I said, most of the people who stay in the industry, because I've met so many people who come into the industry and then leave, but the people who stay long term are those that finally realize that that the market's too competitive to not have that kind of edge. So you have to be using some kind of, some people on MT4 will use like Trade Assistant. There's an EA you can use that will help you manage your risk. Um, I just use the one on my FX book because it's just a browser. Uh, anybody can access it so long as they have a browser open. You can just use a lot size calculator there. So that's why I teach that one. It's because one, it's the one I use, and it's also the one that anybody around the world could use as well. So that's why I teach from that one. But the TradingView has dozens of lot size calculators you can use. So, all right, rigidity. This is one that I actually feel like I struggle with. So I'm going to bring this one up. It says an inability to adapt to changing market conditions, sticking rigidly to outdated strategies, distraction prone, frequently distracted by checking trades throughout the day, akin to checking social media feeds. Okay, so it's kind of like two concepts in one right there. So number one is the inability to adapt. So the weekly trades are kind of like that if you think about it. They're um, the weekly trades, they just get taken in your account. You hold them till Friday, and then you're done, right? That's not necessarily a bad thing. Rigidity can be a good thing like that, especially if you're somebody who constantly changes your strategy up, right? So I would prefer rigidity over constant changing for really no reason that's been well thought out, but it is something to think about, right? So that's why I like the price action trades to overcome my rigidity, is because the price action lets us, we look at news events, we look at uh, different locations on the chart. We use indicators. Anything we can use to our advantage, we use. So I like that ability to adapt to whatever is available to us with those price action trades. Um, so we kind of get the best of both worlds. That's what I think we're doing well with. But yeah, there is this like if you're not willing to try things, sometimes um, like you'll miss out on huge opportunities. Like several years ago, you guys know I bought cryptocurrencies. I got into that. I back in 2017, I was one of the biggest critics of cryptocurrencies. Um, I feel like sometimes I still am, but I've studied it enough at this point that I've learned to see the value of it, and so that's why I continually invest. And I've learned a lot about the cycles of crypto and when these markets typically go up, when they go down, and so on. And so that's why I've invested into it. And especially right now, I'm planning on closing and holding my cryptos until end of next year, middle of next year is my game plan, when I believe this bull cycle will be done with. But had I not invested back in 2019 and 2020, I would have missed out on a huge earning opportunity. And you guys, I think many of you know the story, but like I was actually still in school, and I actually borrowed $6,000. But I did a lot of study on it, and it was a risk I was willing to take, and I finally bit the bullet and put it in, and I made 70 to $80,000 on that trade. It was a really really big risk, but it was something that I didn't feel like it was a huge risk because of the research and homework that I had done. But had I just been rigid the whole time and thought, wow, everything's a scam, like that's how a lot of people told me. They just told me. In fact, I stopped telling people. I actually ended up stopped telling people what I was doing because I didn't get any positive reinforcement behind it. And sometimes that's good too. I mean, that is a bias, right? Um, but I realized that the people I was talking to were people that had not studied like I had studied. They did not look into blockchain technology like I had. And so what, of course, they're just going to be mad at anybody who makes money with anything, right? They're just Debbie Downers, right? So I realized, okay, I want to talk to people who are just objective, like about their investments. I want to find people who they're down when they read the data and the data says this isn't good. But they're positive when the data is good, right? Like that's who I wanted to talk to. So I started to find people who were like that, who weren't really rigid. So rigidity can come from a lot of different points. could come from your own bias and self-awareness and things like that. But this is something that I feel like I've had to um like overcome. And like this happens in real estate too. I used to do, well, I still do in real estate investing. Everybody has an opinion. Everyone's like, it's market's going to keep going up. Other people say it's going to keep going down. So you really just got to talk to the people that don't really have a motivation behind it. They're just clearly objective based, right? Okay, so that's where I mean by rigidity is we need to be self-aware of our own biases and be willing to adapt to the market. All right. I'll move quickly through some of these other ones. I just wanted to make sure I covered that. That was one of the ones I really wanted to cover. Oh, and the last part of that was uh, don't make your trading like a social media feed. Okay, so if you catch yourself checking your trades many times throughout the day, like a social media feed, you're gonna become like an addicted teenager on social media. We don't want you to be like that, okay? Especially with swing trading. This should be a very passive type of thing where you open up your charts maybe a few times a day, and then the rest of the time you kind of put them away. One of the things I've noticed that happens a lot is people check their trades in the afternoons. Why is it a terrible time to check your trades in the afternoons? Well, usually the spreads are wider, okay? There's less action happening in the markets in the afternoons, okay? And so uh, when you look at your trades, you're going to often be pretty depressed with your trades, whether they're up or down. Okay. Because a lot of the times, if you check your trades late in the afternoons, you'll notice that, maybe 3 hours ago you were up more and now you're down, you're not as up. Or if you were already down for the day, now you're down even more. Right. So that's something you'll notice in the afternoons, and it's just a terrible time to trade. So I try to just take it all off. So what I'll do, for me, I'm more constant learner, continuous learner in the afternoons. I'm working on my business, myself, working with clients, working with my physical health. That's what the afternoons are for. Mornings are more for trading and analysis, just because that's a better time to be looking at the markets, anyways. And then I just try to put it away. Okay. It's really important that you do that because that kind of goes back to your discipline too. Like, it's like, what's the purpose of, like, if you're going to take the time, I know it's just a few seconds, but if you're going to take the time to look at your trades, what was the purpose? Were you going to go close a trade? Like, right? Because if it's not your strategy to close the trade, then you shouldn't be opening it, right? So we got to get better with our time. And it's just like it's a little thing that goes so far. I often catch myself doing this because I have the Facebook app, I have Instagram, and I don't do TikTok. I don't like it, but you won't ever find me on TikTok. Some people tell me I need to get on it, but I don't. I used to have it. I deleted it. Um, anyway, that's a different topic, but um, it's crazy how sometimes you'll just pull up your phone and then you're like, oh my gosh, I just spent did I just spend 10 minutes, 15 minutes just doing nothing? Right? Imagine how many books you could have read, how much other things you could have learned in that time. That's 15 minutes of high intensity workout you could have gotten in for the day. You know what I mean? Like, this is just stuff I think about. Anyway, just stuff I want you guys to think about as well. Okay, let's move on to expectations. So actually, I don't need to spend too much time on this because this kind of goes back to the patience thing. But if you're trying to achieve an income daily, that's very hard to do in trading because again, you have to kind of work with what the market gives you. And so your expectations should be more aligned with for the week or for the month and even for the year. Um, a lot of that's why corporations will often measure their success over quarters. Why do they do it over a quarter? Well, one, I think it's a habit, it's a habitual thing. And then another reason why people measure their success by quarters is because you can have a bad month. You can have a bad month of sales, you could have a bad month with trading. But like, in 90 days, that's a better metric of like how you're doing with your finances, right? So that's kind of how I would view it as well. Like I wouldn't kill yourself over um how you're doing on a day-to-day basis. Um, I would just like reevaluate yourself monthly or even tri-monthly, just over a quarter, right? Okay, we talked about high stress levels already. I'm not going to go into too much of that. We talked about inconsistency, awareness. We talked about a bunch. Um, Neglect of continuous learning. We talked about that. And then poor record keeping. So again, for me, my record keeping is a little different. I think it's important to have some kind of journal in your life. Uh, and for me, as far as trading goes, the way I've journaled is I have a different account for every strategy. So I keep everything in separate boxes. And that helps me see how I'm performing. All right, this is the last slide I wanted to make sure we cover. So this is what like you'll probably resonate with some of these already. So we just talked about what a bad trader does. This is what a positive trader, somebody who's likely successful, is probably going to be doing. And you may not resonate with each one of these, but I hope you find two or three of them that you're like, yep, I am solid there. Okay. Because you got to take those gains where you're already good and then you can start to work on the things that you're not as confident or not doing as well in. But like kind of look through here and just kind of take a look at the things that you feel like you're already doing well with. But like I said, emotional stability. I shared that example earlier about somebody who has chosen not to road rage even before the road rage incident comes along, right? If you're if you're somebody that already has that predetermined reaction and response to a situation, you're likely a lot more successful in a lot of areas of your life. I'm serious, like it's a big deal. This is something that I didn't really think about. I don't know if I was taught it, but it's just something that I've been really thinking about is the importance of having um, your game plan before because I get these news articles like where I live. I live in a pretty cool place. There's a golf course in my backyard. But just like if I go north that way several blocks, there's a big highway. Okay. And the golf course is kind of in the middle. And if I go uh let's see, south a few more blocks, it's kind of a bigger road. It's not a highway, but it's a bigger road. So I'm kind of in the middle. And so I get these news stories all the time where I'll hear sirens or I'll read news stories about people who have bad car accidents on this road up here and um it's usually like some kind of road rage incident, right? Because it's one of those highways where it's not a freeway where it's like really fast, um, where it's 70 miles an hour, 65. It's more like a 55 with stoplights. Those are the worst type of roads in my opinion because you've now added stoplights and residential folks entering onto that highway. At a higher speed where, if the speed limit's 55, then people are going 65 type of thing. Um, and so you get these road rage incidents quite often over there, and people run each other off the road. And so what I've determined to do is when that kind of thing happens, I'm more alert on that road. I've decided that I'm not going to participate because I know of people who have, you know, great people who get involved in those types of things and then uh, um, 20 seconds of their life where they decided to participate in something like that ruins the rest of their life and maybe the life of somebody else. And I thought, really, for 20 seconds of my time, that's what it's gonna cost. I was like, yeah, I don't want anything to do with that. So I've just decided I'm not gonna participate, right? And so these are the kinds of things um, like if you have stuff in your life where you react a lot, um, then work on that mindset. Think about, okay, if this kind of thing happens, how am I going to handle this situation? So if you have that kind of stability, um, you will be a more successful trader, period. It just is going to happen. Okay, so we talked about a lot of these other things. We talked about the need for strong discipline and patience, especially with swing trading. Having confidence with your trades is very important. Um, in fact, the lack of confidence um, is it's hard to actually make real money if you don't have some level of confidence and mojo with the trades that you take. With that said, you got to make sure that you have proper risk management, effective risk management when you go into a trade pretty confidently. And then, yeah, adaptability. Like today, we talked about several news events that are coming up, right? So a lot of these yen pairs, we're ready for them to drop soon. We're just trying to see what this news event on Sunday says about the yen. My guess is whether the market goes up or down, it will ultimately be led by a move to the downside at some point. And I'm just trying to prepare for that whenever that move finally comes. Okay, we talked. Yeah, I think we pretty much covered all of these. It's just basically the same things we already covered, but now, um, these are just people that are good at those particular aspects. I think for me, like if I had to pick two or three that I believe I'm pretty good at, I would say my risk management is really awesome. Like I'm really good at my risk management. I also believe that my emotional stability is pretty well, like I've got it pretty well locked in. Um, yeah, like I handle situations pretty well at this point. At least I believe I'm pretty good. I'm trying to be pretty honest here. Like I feel like that is actually something I'm really good at. And let's see where else. I would say um probably objective decision making is where I when I trade, I try not to get a bias with like, oh, if I saw a news event let's say CNBC says something like, for example, you guys remember like a month ago, CNBC was like, oh, the Dow Jones just hit a 5 week low, or this is the lowest low of this is going back to the lows of 2022. And they were telling everybody like, "Oh my gosh, the market's crashing." Meanwhile, the banks were buying, like objectively, the banks were buying the Dow Jones and Nas 100, and look where we are now. Those things are at back to all-time highs just 5 weeks later, right? So I feel like I'm pretty good at the objective side, um, making those types of decisions. Um, so yeah, and then back to I'm just gonna go back to this last slide. What are the top two or three that I need to work on? I would say yeah, the rigidity is definitely something I preach this, but I still look at my phone quite often. Like I do check trades quite often, many times throughout the day. And I need to work on that part. So rigidity is definitely something I need to work on. Um, I need to work on my discipline. I think I mentioned that earlier. Yeah, discipline is different from the rigidity. We kind of discussed the difference between the two. I already have those things that like I said earlier, making my bed in the morning is something I don't deviate from. I always do that. But um, I, I have these other things that I do in my life in the mornings, like things like what I do physically, things that I do emotionally, things I do spiritually, all those kinds of things. Sometimes those things uh, go down to the wayside when I feel like there's other things more pressing. So that comes back to my discipline is what's my commitment level to those other things that I want to do. Right. So that's another area that I feel like I need to work on. Yeah. So I'd say rigidity, discipline. Um, and I also say I have some pretty high stress levels that I need to work on as well. Um, but but it's a work in progress. It's definitely something I recognize that that's something that I need to work on, but I can definitely do it. So, but it's good. Like it's good to recognize that you are weak in some areas, and then there's other things that you're already doing pretty well with. Let's see. Let me read some of these comments here. Paul says, "What if any are the pros and cons of different lot size calculators?" Oh, that's a great question. Yeah, we talked about that earlier, at least about the need for a lot size calculator. I wouldn't say there's I wouldn't say that there's a huge pro and con to another. Like for example, some people trade exclusively in MT4. So there's this EA called Trade Assistant. You can Google search it. It's very popular EA. And it's just something that you can plug in right into your MT4 and you can calculate your lot sizes directly there. For those that trade directly on MT4, that's probably the best way to manage your risk. Um, but I wouldn't say there's anything, I wouldn't say that it's better than the other, right? So I definitely think that I don't think it matters that much. However, like if you're going to trade like NAS 100 or US 30, or if you're going to trade gold and silver, I like the cashbackforex.com uh, lot size calculator. That seems better if you're going to be trading NAS or US 30. If you're just trading Forex pairs, I like the one that I use. It's the MyFX book position size calculator. That's my favorite one. I wouldn't say one's better than the other. I think they're all the same. Just one's, that one's for Forex, and the cashback Forex one is more for NAS 100, US 30, gold and silver, oil. That's what I would say. Mohammed says, I'd also say you're patient. Appreciate that. It says whether it's entering a trade or waiting for a trade, not easy to do. Yeah, thank you. I appreciate that. Yeah, that's a big thing. We talked about that today. Is sometimes just a lot of trades don't line up exactly the way you want, and then you'll have like 6 or 7 swing trades that'll line up all in one day, and it's not like you can just go to the market every day and pull out a swing trade perfectly each day. A lot of the times they'll line up once or twice a week, and you just have to be patient for that 1 or 2 moves that actually work to your favor. So yeah, that's appreciate the comment. Thanks for saying that. All right, guys. Well, I think that's about it. And yeah, Danny says great webinar. Appreciate it, Danny. Thank you for coming, each one of you, and have a fantastic rest of your day. And we'll see you guys in the next webinar. Thanks for coming.